Ladies and gentlemen, welcome back. My name is Juliuz and I'm watching trading videos so you don't have to. Today we are watching fxalexg. This is my first trading video from Alex and he's basically teaching us the only strategy that we need to be profitable. It seems like it's a swing trading strategy. I'm a day trader, but I want to open my horizon to new stuff. Alex has 1.3 million subscribers, so I guess he's pretty popular in the industry. So let's get right into it and hopefully we can learn the best swing trading strategy that makes us profitable. You guys leave us up and a like down below, and now let's enjoy the video together and take a look on what I have to say to all of this.
The only way to make money in trading without having to look at the market every single hour before it opens and closes is by simply swing trading. Swing trading allows you to understand the bigger picture of the market, and this way you are able to capitalize off of bigger moves. There's a better alternative to trading other than just
this video is pretty long, so I'm gonna fast forward it at least a little bit.
Watching it when it opens, watching it when it closes, and having to follow the daily direction of the market. Swing trading is the best single-handed way in order for you to maximize the most amount of money from the markets.
I'm not the biggest fan of swing trading just because I want to open and close my positions on one day. I do not want to be exposed to the bigger fundamental things happening in the world like politics, etc. I want to get into a trade and hold it for like maximum like an hour and close all of that stuff. So I'm not getting exposed to all of the crazy stuff there is happening outside of trading that I cannot influence, okay? You could be right with your technical analysis and your current fundamental analysis, but then something crazy happens in the world and your position crashes against you, and I hate that.
You can look at, for example, this trade where it made me $414,000 in 4 days. This is a semi-swing trade, and I'm going to break.
Okay, that is a statement. $414,000 in 4 days, that's like 100K a day. If that is remotely true, he's one of the biggest.
Down in this video exactly how I did that, and I'm also going to be breaking down this trade where I made about $260,000 where I held for a little bit over a week. Swing trading is the perfect way to trade if you have a 9-to-5 job, if you're busy with school, because you enter a position and
that's true, okay? If you are not in a position where you can trade full time or you have those 3 hours at market open and stuff, then swing trading is for sure the better alternative than scalping or day trading.
You let the direction of the market for the entire week make you profits while you simply lay back and let the market continue trading with the trend that you're doing. So with that being said, let's get right into it. Now, for those that might not know, let me give you a little bit of context on what swing trading is. So swing trading is actually the safest way to trade. It might take a little bit of longer for the markets to play out. There's some pros and cons, but let me give you the full framework of it. Swing trading is where you're trading with the higher time frames. The reason why it is safer is because the higher time frames are very predictable, because it takes a very long time for certain market structure to be created. For example, let's say you're going to build a concrete block and you were to give it 30 days to dry, it's going to be a lot stronger.
Okay, it's a really professional video and he's explaining everything in great detail for the beginners here. So this is great value, perhaps. With those higher time frames, I can also use higher time frames for quicker trades, okay? I can take a look at the 1 hour or the 15 minute to execute in a 1 minute.
Compared to a concrete block that you give it 24 hours to dry. So every single candlestick that is performed on the higher time frames for swing trading take a lot more time for it to be created. So it's going to be a lot more respected compared to lower time frames where things happen very fast. That is not as concrete, it's not as strong, it's not as respected. So the higher time frames are very predictable because the market moves in patterns and these patterns take very long for them to create themselves. So they're very predictable. It just simply requires patience. So when you're trading with swing trading, you're holding for longer because the moves are bigger and you're having safer trades because they're a lot more predictable. So you're able to not only be able to risk more on positions because they're less risky, and you're able to match.
I wouldn't say that. You shouldn't risk more in a swing trading, but swing trading for sure has its advantages. For example, that you probably won't blow up your account as fast as you might do in scalping. Yeah, if you're wrong on a position, it might take a couple of days before you are stopped out, so you probably won't blow your account on a day and you won't get into that downward spiral of over trading and adding to the position, adding to your loser, adding to your loser, adding to your loser until the account is gone. This won't probably happen to you with a swing trading position. Risking bigger, I'd say you should risk the same as in smaller time frames. Maximizing profits, it's like depending on your position size, okay? I'd say it's always a matter of your account size, so your profits and your risk should be the same if you're executing in the 1 minute or in the daily. Okay, that is like just another position size. But there is another advantage, and that's the commission. Of course, if you're holding for a longer period of time and bigger movements, your position size will be smaller, which also equals to smaller commission than in the smaller time frames with a bigger lot size. Okay.
Maximize more profits without you having to overexpose yourself. The only con when it comes to swing trading is you will need some patience. But as time goes on, this becomes inevitable and normal in trading. Now,
and this is also one of those things. Imagine one has $1,000 trading account. This is not that much money. So I think, okay, with swing trading, what can I really expect? Maybe you open 2 or 3 trades and they take a couple of days before they turn out into a relatively small profit, while in day trading they think they can make those small profits all in like a couple of hours and grow the account faster. That might be true, but the risk is so much bigger, especially with those small accounts.
Understanding that there's 3 popular ways to trade. You have scalping, day trading, and swing trading. Scalping is anywhere a trade that can take anywhere from 30 minutes to about 1 hour, where you're really holding a position for a very quick move. You're not.
Is that really scalping? I'd say scalping is like, I don't know, what about a 15-second trade? Just capturing a little bounce or a little breakout. That could also be scalping. I say 30 minutes to 1 hour, that's more like day trading to me.
Targeting trades that are going with the higher time frames. You're just trading the move for that specific session. So if you're trading market open, you just want to catch the impulse move from when the market opens.
And also, I know I already talk way too much. I'm gonna be a little less chatty in a minute, but this trend to go to lower time frames and even lower time frames and even lower time frames to a point where you just want to hold a trade for 20 seconds is not good development. At the point where you started trading or thought about day trading, you probably did not have in mind of just holding a trade for a couple of seconds or a couple of minutes. Probably your idea was just to sit in front of the desk and holding a trade, I don't know, a couple of hours and closing it on the same day, and that was already pretty quick for you. But now we want to make profits even faster, just holding them for a couple of seconds. I think the development is not that good. So I appreciate that somebody is talking positively about swing trading, even though I'm not a swing trader.
Or right before the market closes, you just want to catch that impulse move. This requires a lot more trades because you're just trading these sporadic moves up or down, and you could be in and out of a position probably 2 to 3 times every single day, which you're going to have a much more lower win rate, and you're going to have a lot more quantity amount of trades. So this is where I don't personally like trading, just because it's very stressful having to predict and change the bias of the move every single day. But traders that have a sense of urgency to trade every single day like trading it, but it's very stressful because you have to be in front of the markets for many hours at a time and constantly changing your bias in the market. Day trading is pretty much the perfect medium in between scalping and swing trading. It's where you're trading a direction for the entire day or for the next day, market open, market close.
Okay, again, my definition of day trading is like a little different. It's not holding a position for 2 days. Day trading is holding position for 1 hour, 2 hours, something like that.
So for example, let's say market opens in New York session, you anticipate for moves to happen to the upside. You're going to continue to trade for the upside for the duration of that session. Could be 5, 6, 7, 8 hours, typically is what a day trade lasts. Or you can take a trade that will last overnight, which is also considered a day trade / intraday trade, where you're holding it during the duration of the next day. Now, this style of trading, you're not really taking that many amount of trades. You can probably take 1 to 2 trades a day max, but you're not changing your bias and you're not looking for impulse moves. In scalp trading, you're looking for a big impulse move just to catch that move and then get out. You don't care what the overall direction really comes down to because you just want a quick move to get in and out of the market. Day trading, you are taking a little bit of anticipation of the higher time frames, but also combining a bit of the scalping with the impulsiveness because you want to get out of the position that very same day or that next day. In scalping, you want to get out within the hour. Day trading, you want to get out within the same day or the next day. And the win rate for day trading can typically be anywhere from 50 to 55%, which is very healthy. And you're in.
I don't know. I think you could also have a very, very high win rate in day trading and also in scalping. Okay, if you're a little selective with your entries, you can also reach for up to the 70%. Some might argue they get a 85% win rate. I'm not sure about that, but 55 seems a little low.
In the middle of quality and quantity, simply because you're looking to take a trade every single day, depending on the session and depending on the direction of that session. Now, swing trading is the godfather of all of these trades. It does require a bit more patience, and it simply comes down to trading with the trend purely. If you are swing trading, you want to anticipate a position that can continue to go in a direction for weeks at a time. And it's very easy to scale in positions that you can anticipate if it's going to continue going up for the next 2 to 3 weeks. So once you're an experienced trader like myself, you can understand how to day trade and scalp on a swing trading move. Because if you can anticipate that the trade is going to continue going up for the next 2 to 3 weeks, you can find these smaller positions inside of that bigger position where then you capitalize off of a swing trade, a day trade, and a scalp position. Swing trades really come down to maybe 1 to 2 trades a week, if that.
Yeah, and that's in most cases too little for beginners who try to make the most out of their $1,000, okay? Because of course you do not want to risk your whole account on one swing trade, because this also can go wrong, especially what I've said previously in politics and fundamentals. If something particular happen, you get stopped out. And of course you do not want to risk your whole $1,000 on one trade. So your result will be a little less in absolute numbers over time than in day trading. Just can execute 1, 2, or 3 trades a week, okay?
And you don't care how long it takes for it to get to your take profit. Typically, what it should last is anywhere from 4 to about 8, 9 days. And you can make 3 to 4, even 5 times what any day trade and any scalp trade could take. The reason for this is because you need to wait for those weekly candlesticks to close. Those weekly candlesticks take about 5 days to close, or at least trading days. And those candlesticks opening and closing dictate the direction of the following week. So for example, let's say you're looking to buy on the weekly time frame based off of the trend of swing trade, and it closes bullish in that direction. If next week it closed bullish and you're still looking for more buys, why would you want to cut your winning position short? It's only indicating that it could continue to go in that direction. You're simply going to continue to hold. Now, what an experienced trader like myself and many members of my academy do is we find day trades within that swing trade position, and then we capitalize off of that every step of the way. It's a bit riskier because you're overexposing yourself to an additional risk by entering another trade. But if you have
But isn't this what every day trader is like doing? He's checking higher time frames before entering his day trade. The only difference is that he is also on the same time in the swing trade on the weekly, and additionally executing the day trading stuff.
The bigger swing trade to hedge that day trade, you're really not putting anything at risk. If you're in profit way down here and you're adding an extra position up here, even if that day trade loses for whatever reason, that swing trade can make back that loss and you don't have anything at risk. So the beauty of understanding how to swing trade is the godfather, like I mentioned, of all of these time frames and these different trading styles, because regardless of what happens on the lower time frames, if you can predict the direction.
But aren't the time frames more or less similar? Okay, I'm not talking, maybe not talking about the 5 minute or 1 minute, but is there such a big difference in technical analysis between the weekly and the daily? Not that much, okay? You have to set a target. If you just want to trade based off price action, it's the same in the weekly. You just cannot hold a position just because another week printed a green candle. At some point it's going to print a red candle and is eating up a lot of your profits, okay? You have to close the position. It's the same in the daily.
In the higher time frames, this is obviously far greater and it is a lot less stressful. The main reason why I am a swing trader and why I was able to actually learn this strategy is because I had a job when I learned how to trade, and I didn't have the availability to be in front of the market at market open or even on scalping, so I was forced to.
But don't get me wrong, I really like what he's talking about here. It's making 100% sense and it's great advice. Don't get me wrong here, and I like his style of talking. So actually I was a little skeptical at first because it's like one of those traders who shows his Bugattis and stuff. So if you know whether he's really legit, let me know in the comments below. But I was skeptical at first, but this makes a really good impression of a educational trading video.
Understand and learn trading this way. And I'm very grateful for it because now, longer term, it's helped me understand the direction of the entire market. So swing trading, you can have a win rate anywhere from 60 to 65%, but the risk to reward is by far the greatest, and you're able to have that recovery from any losses that you can have. You make back losses far easier because your profits are far larger.
I would 100% agree with him. Reward risk ratio, okay, this is a point that I give to him. This could be really better in a swing trading position, okay? Because the trends are indeed bigger in swing trading than in scalping or day trading.
Now, I will warn you, swing trading has a bit of a bittersweet taste to it simply because of one thing: patience. Does not matter any type of human that you are, when you are having an opportunity to click a buy and a sell button 24/5 the entire week, temptation will kick in. Doesn't matter how experienced you are, how much patience you have, that temptation of clicking that buy and sell button is always in the back of your head. It's like if you have a little devil here on your shoulder constantly telling you to execute a trade. And swing trading will require the
I think that's a problem that's quite easy to solve if you find yourself a strategy in which you can execute like 3 trades a week You can just tell yourself, I do not need to execute today. I'm going to execute a trade tomorrow and you'll be fine. So of course, if you have to wait 1 or 2 weeks without getting into position, then this can lead to a real problem where you just want to get into position so bad that you take everything. But if you tell yourself, okay, I'm going to execute 3 trades a week. Today is no real setup. Okay, I'm going to wait for tomorrow. Probably I'm going to enter tomorrow. I think that isn't the biggest problem if you get into it with the right mindset.
Most amount of patience, because there can be times where you're looking at the markets for a duration of 4 days. So hopping in and out of the market, looking at it and analyzing for 20 to 30 minutes and not entering a position. You might miss out on opportunities. You might miss out on these smaller moves, and that can really affect your psychological aspect of trading because you're constantly battling on entering a position or not, because you have to wait for the perfect trade that can continue to go in that direction for the duration of a week or 2 weeks. So it's great as soon as you enter a good position because you're making money week after week without having to do absolutely nothing. But it is very, very difficult at times to do nothing when you're not entering a position and when
again, this is the same thing like in scalping, isn't it? You enter position in scalping and then you are just patient and you shouldn't do anything for the next minute and the next minute and the next minute. And then you can take profit. It's the same in the weekly, it's just that the time frame is different.
you're in a position. Us as human, we are human at the end of the day. We will fall into temptation, any type of temptation. It's almost like if you love sweets and there's a jar full of candy and they tell you, hey, you can't have any candy for 4 days. And the jar of candy is following you everywhere for 4 days. You might put your hand in the cookie jar once and take a bit of that sweet.
That's true.
Trading is no different than that. The market is available 24/5 for you to enter a position, and you have to be very patient for when it's the right time for you to enter that position. Before you enter it, and once you're in that position, you need to let that winning trade run. I know it's very difficult at times to see a winning position even come back into a little bit of a retracement and miss out on quote unquote profits that you had at that time. But if you're swing trading, you need to understand that the market will create these retracements in order for the market to continue going to the upside. From the moment you enter, it's not going to be a ginormous candlestick to go straight to your take profit. It needs to create structure to go to that take profit.
Of course. Now, this is really different than in scalping. If you're just holding a trade for a minute or two, then there is a chance that you just get one enormous candlestick that immediately goes into your take profit in the weekly and stuff. Okay, this is unrealistic.
So that will consist of highs and lows to get to the point where you're supposed to be. And you need to be able to.
But I want to see some charts here. Do we get... Yeah, okay, we get to see some charts. I'm hyped.
Have the stomach and the patience for you to be able to weather that storm. And that is what crushes traders in swing trading. People can predict the direction for the next 2 weeks, and that's all easy. But what is not easy is being patient and letting for that trade to go all the way to your take profit. So if I were to have the main con of swing trading or just trading in general will be patience, waiting for that right setup and letting that setup play out. Biggest battle you will face regardless of what level you are in trading, and once you master that is where everything changes. Now, enough with the talking. Let me actually go into the charts and give you a real live example of a trade that I entered. This is GBP/USD that made me $250,000. Now, I know that
okay, I want to see the $250,000 trade.
might seem like a lot, and it is a lot of money, but you need to understand that I also risked a lot in order for me to make that. I risked about $80,000 to $90,000 on this exact same position. That's why I was able to.
But isn't this the same thing again as in day trading? Couldn't he just risk $80,000 on a day trade and make $200,000?
To make this amount of money. So don't think that I risked $1,000 or $2,000 to make $250,000. No, I put a lot of money at risk to make this money. But the beauty of this trade is that I was able to predict it for the duration of 2 to 3 weeks. So the beauty of GBP/USD is I was predicting the retracement of this trade. So I'm about to get very technical on
Okay, we are in the weekly. All right.
this trade, so bear with me. If you're driving, stop driving. Shouldn't be watching a video as you're driving, but just saying that just
Who's watching this video while driving? Oh, I'm like driving 80 miles per hour. Let me just watch some educational swing trading video on the side.
in case you don't know, if you're at a coffee shop, put the volume up, put your headphones on. If you're at work, take a break. Pay attention to this because this can be completely changed in your entire trading by understanding how the market moves.
Okay, first of all, what I can see right here is that probably a lot of people expected this level to first of all act as resistance. So yeah, so the levels are very, very beautiful and easy to identify here. Okay, the next level would be up here. So after the push back up from this level, he basically executed a first trade to this one, and some might say I'm waiting for a pullback from this level here. But again, we want to see at least some entry bar for that, which is not happening here. So it might sense to now wait for a retracement, maybe back down here to then go higher.
Pay attention to this because this can be completely changed in your entire trading by understanding how the market moves. So When it comes to understanding any swing trade, the most important thing that you need to understand is the trend. Where is the trend headed in that position? For example, this trade in this market that I'm drawing up here, it's very obvious that this market is clearly heading to the downside. We all know the lower highs and lower lows of the market. This is a lower high. This is a lower low. Whenever a market has a lower low, we anticipate for the trade to have a lower high. On this lower high,
Okay, now this is really beginner's advice here, but not bad.
we anticipate for it to have a new lower low. That's simply how the market moves. That is market structure. Imagine this as if it were to be a staircase going to the downside. In order for you to go from one staircase to the next one, you have to step here. And then after you step here, you step here, and you step here. You need to go through every single one of these steps in order for you to get to the next step. Can you skip a step? Can you go from this step to this step? Yes, but you will probably fall and break your ankle. I'm sure we've all been there, except the breaking the ankle. Trading is no different. In order for you to be able to predict these swing legs to the downside, you need to have these retracements that you anticipate in order for this move to go to the downside. Now, this trade in specific, GBP NZD, I predicted the low of this leg. So as you can tell here, this market was very beautifully creating higher highs and higher lows, higher highs, shifted structure, and then it created a lower low. So this market was very predictable because we created a massive push to the downside. So we were clearly bullish at one point. This was the higher high in this market right here. After we created this higher high, we had this higher low. After this higher low, we shifted the structure. So now this became the new lower low, and then this became the lower high. What happens after we have a lower low move? In order for us to continue to go to the downside, we need to predict a lower high to then continue going to the downside. There's no way that this market could just continue free falling for the entirety of the move. No, it needs to create these retracements right here in order for it to go to the downside. So me understanding this direction of the market on the higher time frames, I then go look for entries on the lower time frames. So I have a swing trade analysis, but then I can go take an intraday entry. That's exactly what this trade consisted of. My swing trade analysis was very predictable. After this move had this massive push to the downside, we got near this support level that every single time we're above, we clearly reject up, and here we were clearly going to reject up. When I go down to the daily time frame made it as clear as possible that we're going to have that leg for the lower high to have the push to the upside. So we know that on the weekly time frame, this is the big leg that we're anticipating for this move to come up and then continue go to the downside. Now on the daily time frame, as you can see here, this created a lower low, lower high, lower low, lower high, lower low, lower high, lower low, and then we had a shift. So now we went from creating lower highs and lower lows to higher highs and higher.
But look at the time frame we're looking at. We're looking at several months of waiting on the daily chart. And then he captured, okay, the last move of the pullback of the short trend.
Lows. If I were to bring this market structure right here, you can very much see lower high, lower low, lower high, lower low, lower high, lower low, and then we shifted to the upside. It's almost as if we were to be in a bearish channel to the downside, and then we shifted to having a bullish channel to the upside. This is the beauty of understanding how to read market structure. The lower time frames, or the next lower time.
But I can find this market structure in the 1 minute as well. I'm sorry. This is basic technical analysis. It has nothing to do with just swing trading. You can find those structures maybe a little less obvious, maybe a few percent, but in lower time frames as well. In the 15 minute, in the 10 minute, in the 5 minute, and also in the 1 minute, you can find those things. So if you understand basic technical analysis, which this video contains, then you can trade every time frame. It's just a matter of position size.
Time frame, which is the daily compared to the weekly, is giving me the indication that it is shifting right here and creating moves to the upside to have that retracement for the higher time frame. You need to remember the higher time frame was like this. It was consolidating, and then we had the push to the downside. Now this is indicating to me that it's ready to have this retracement. This is exactly how it looks like. So it's ready to have this retracement to this area, so then it can have the push to the downside. So I'm
okay, this is fxalexg. Can I take a look at the 1 minute? Yes, I can. Okay, basically, isn't this the same thing here? We are going lower, we make a lower high, eventually a lower low. And now it's obvious that we're gonna print a lower high again to, in theory, go lower or break that. In this case, it broke the lower short trend. It's a 1 minute chart, guys. But so after this accumulation zone, and it's the first thing I'm seeing on this chart, okay? It's like from today's morning. So it's the first thing I'm seeing here. I did not take a look at the chart. We can see, okay, the market was slower here wasn't able to print any lower low, so a lower high is overdue. So you could speculate on this move, put a stop loss down here, maybe go for a 2.5 to 1 reward risk, maybe enter up here, and in theory you could go for a 2.3. that was the most you could go for. But if you just go remotely to 1 to 1.5 reward risk, you would have been filled perfectly fine. So you can find those things in the 1 minute as well. Same thing as when we continue here. Okay, now we get the push lower. You could now speculate on a lower low. In this case, if you say this short trend will continue, of course you have to look at higher time frames to really see the fundamental trend that we are currently at. But the moment you see, okay, we're gonna print a higher high now with a higher low, we are in a bullish trend again. So you could speculate, okay, after this higher high, we gonna have to print a lower high. So you could speculate on this move, etc, etc, etc. You can find those things in smaller time frames as well. Maybe not that beautiful and clearly a little less obvious, but the fundamental thing that he's explaining here is the same in every time frame.
Taking a intraday / inter-swing position for this retracement here, so then we can enter the continuation sell to the downside. All of this because I can understand how to read the higher time frames. So what I do on Jimmy PNZD, I can identify that we are
So what he's talking about currently is trading those little retracements in the trend, okay?
indeed heading to the upside. And
not the trend itself.
I can see that we have not only the bullish structure, but we also have resistance. We also have support. When I go more to the left, we have support, we have resistance, resistance, and resistance. Clearly, whenever we're below this point, we're heading down. Whenever we're above it, we're very much going up. Whenever we're above, we head up. Whenever we're below, we head down. This is literally just understanding what the market is presenting. Picture this as if it were to be the English language of the ABCs. This is literally the letters. ABCs of the market, I'm just reading the letters. Now, how I put those letters together and how I make my words, that's where my strategy comes in, how I enter, so on and so forth. This is just the basics. And 90% of the people can't do this correct. That's why they are not successful, because they can't understand the overall direction of the market. Now, after that, price is above my EMA. After us being above the EMA, I then look for entries on the lower time frames, and that's why I entered this position around this zone right here. My stop loss is below the very strong level of supportive resistance, because clearly, if we're going to go hit this position and we're going to make it to this area, we're going to be below it. What happens if we get below this resistance? We should technically then head to the downside. So I'm always going to put my stop loss at an area where if it gets hit, I am entirely wrong. That is the most important thing. I can't tell you how many traders trades
Yeah, this all makes beautiful sense.
I review. Anything from this trade is for this weekly time frame to have a lower low leg, have a lower high leg, and then continue going to the downside. So I'm taking an intraday trade on this retracement before it continues to go to the downside. So what I want to do is I'm placing my take profit at a weekly area. If I look left, based off of this market, clearly literally the exact same concept. Anticipate these bigger moves, and I could have maximized and gotten a 1 to 3, 1 to 4, but I was content with my position being at a 1 to 2 because I understood logically that the weekly time frame should have stopped at this area and then continue to go to the downside. But if I would have followed my rules, which is what I explained to you guys earlier, waiting for that weekly candlestick to close, which is this candlestick here, I would have closed it at the top here for a little extra 0.5%, nearly an extra percent on the position. At the time, I just wanted to close the position, didn't need to hold any further, and I made that decision. But this is the beauty of sticking to those swing trading analysis and overall directions of the market. Now, obviously, you fast forward a couple of weeks, and then this market ended up indeed having a reaction from this area slightly after it had the push to the upside. So all of this is by understanding the direction of the market. When the market is heading down, you understand it needs to have a little bit of a retracement.
Okay, this was a really, really good video. Definitely make sure to check out the rest. It's gonna deserve a like. This was like basic stuff for beginners, okay? This was 101 technical analysis. More or less everything he says. I'm a little different opinion on the point that this is just swing trading stuff. I'd say this is good for every time frame. My opinion on scalping is a little different. He's talking about 30 minutes to 1 hour. That's not scalping in my opinion, but on the basic stuff, we are on the same page, okay? This is basic trading stuff. Everyone should know it. Does this alone make you profitable? Depends on how good you can execute it, I'd say, okay? Thank you guys for watching. This was actually a good video. I'm positively surprised that this is actually decent education for free. He's selling a course, I guess, with all of those Bugattis. But again, this is content for free that you can really use in your trading. Thank you guys for watching. We're gonna see us in the next episode. Take care of yourself, guys. If you enjoyed the video, leave a like and subscribe to the channel. Have a nice rest of the week. Good luck with your trading. Bye bye.